Welcome back to Investing Talk Podcast. Today, we're going to be taking a look at Ambev SA,
Okay.
ticker symbol ABEV,
Right.
a major beverage company in South America.
Yeah.
You might be surprised to hear that their stock has been kind of struggling lately,
Really
especially compared to the broader market.
interesting.
So Ambev is currently trading at around $1.84.
Okay.
And while that might seem okay at first glance,
Uh-huh.
it's actually down over 32% since the start of the year.
Wow.
And over the past 5 years,
Yeah.
it's taken a 60% plunge.
Ouch.
So,
Yeah.
pretty big difference there.
Yeah. That's a stark contrast to the S&P 500,
Right.
which has seen, decent gains over those same periods.
Yeah.
So it begs the question, what's going on with Ambev?
Exactly. Are they just a bad company?
Yeah, well,
Did they miss the memo on how to make money?
not necessarily.
Exactly.
What's fascinating is that Ambev has consistently grown its earnings per share,
Okay.
or EPS.
Well-
Over the past 5 years, they've managed a solid 5.2% compound annual growth rate, or CAGR,
Okay.
which essentially means their profits are steadily increasing.
Got it.
They're definitely doing something right from a business perspective.
Okay, so if their earnings are growing, why is the stock price tanking?
Right.
That doesn't really add up.
Well, that's where things get a little more complicated.
Okay.
We need to consider those external factors that often influence stock prices,
Okay.
especially in emerging markets.
Got it.
One major headwind has been the strong U.S. dollar.
Okay.
A strong dollar makes U.S. goods more expensive for buyers in other countries.
Right.
And it can also hurt companies like Ambev that earn revenue in other currencies.
So it's like a double whammy for Ambev. It hurts their sales and then makes those sales worth less when converted back to dollars.
Exactly.
Got it.
On top of that, we have rising interest rates,
Right.
which can make dividend-paying stocks like Ambev less attractive to some investors.
I see. So investors might be shifting their money into bonds or other investments that offer higher returns in a rising interest rate environment.
Right.
So it's a bit of a tug-of-war Ambev's solid company performance versus these larger economic forces.
Precisely.
Okay.
And to fully understand this situation, we need to dig a little deeper into Ambev's financials.
Okay, let's do it.
Let's start with their market cap,
Okay.
which is roughly $28.94 billion.
Okay.
This essentially represents the total value of the company in the eyes of the stock market.
Okay. That gives us a sense of their overall size.
Right.
But what about their valuation? Are they overpriced, underpriced, or somewhere in between?
Well, that's where the price-to-earnings ratio, or P/E ratio, comes in.
Okay.
Ambev's P/E ratio is currently 13.14.
Okay.
Now, to put that into perspective, the average P/E ratio for the S&P 500 is around 18.
Okay.
So Ambev is trading at a significant discount to the broader market.
A lower P/E ratio than average could mean investors are undervaluing Ambev.
Right.
Or it could signal that they're worried about future earnings growth.
Exactly.
How do we figure out which is more likely?
That's the million-dollar question, isn't it?
Right.
We need to examine other financial metrics, like their profitability and efficiency, to get a clearer picture.
Okay.
For example, Ambev boasts a gross margin of 50.98%.
Okay.
This tells us they're managing their production costs effectively and generating a healthy profit on each unit sold.
Okay. So they're good at making their products.
Uh-huh.
But what about their overall operations? Are they running a tight ship, or are there areas where they could be more efficient?
Their operating margin,
Okay.
which stands at 23.87%,
Okay.
suggests they're doing a pretty good job on that front, too.
Right.
This number indicates that they're converting a substantial portion of their revenue into operating income, which is a positive sign.
So we have a company with a solid track record of earnings growth, efficient production, and strong operational performance.
Yeah,
Yet their stock price is down significantly.
right.
It seems like investors are focusing more on the external headwinds than on Ambev's underlying strength.
That's a plausible explanation.
Okay.
But remember, the market is always forward-looking.
Right.
Investors aren't just reacting to what's happening today.
Right.
They're trying to anticipate what will happen tomorrow.
Yeah.
And in Ambev's case, there's some uncertainty surrounding their future prospects.
Right. We can't ignore those concerns about the strong dollar and rising interest rates.
Yeah.
But hold on. Haven't some analysts recently become more optimistic about Ambev?
Yes, there's been a bit of a shift in sentiment.
Okay.
In early January of 2025, Grupo Santander upgraded Ambev to outperform
Right.
with a price target of $3.56.
So they believe Ambev's stock price is likely to outperform the market going forward. It's like a bold call considering the recent downward trend.
Yeah, it is.
What's their reasoning behind that upgrade?
Their optimism seems to stem from Ambev's efforts to maintain stable revenue despite those external challenges and their plans to expand into new markets.
Okay.
They're betting on Ambev's ability to adapt and overcome these obstacles.
Got it.
And the market responded positively to this news, with the stock price jumping 3.35% on the day of the announcement.
That's a significant jump, especially after such a prolonged decline.
It is.
It seems like some investors are starting to buy into the idea that Ambev might be turning a corner.
Yeah, seems that way.
But of course, we need to consider the perspective of other analysts as well.
Right.
There are always different opinions and interpretations when it comes to investing.
Absolutely. And not all analysts share Grupo Santander's bullish outlook.
Okay.
Just a couple of days after that upgrade, Bernstein analysts cut their price target for Ambev from $3.08 to $2.57.
Wow. Talk about a quick change of heart. So they became less optimistic about Ambev's potential.
Not necessarily. It's important to note that they maintained their outperform rating
Okay.
even while lowering their price target.
Okay.
This tells us they still believe Ambev can outperform the market,
Ah.
but they're acknowledging some concerns.
Okay, so it's not a complete reversal, but a slight adjustment based on new information or changing market conditions.
Right.
What factors are driving this more cautious outlook from Bernstein?
Their primary concerns seem to revolve around the weakening Brazilian real,
Okay.
which puts pressure on Ambev's earnings when they're converted back to US dollars.
I see.
They're also worried about broader macroeconomic pressures that are impacting the beverage industry as a whole,
Right.
such as rising input costs and changing consumer preferences.
It seems like we have a classic case of mixed signals. Ambev has solid fundamentals and a positive outlook from some analysts. Yet there are also valid concerns about external factors and broader industry trends.
Exactly. And to further complicate things, the technical indicators are also giving us mixed signals.
Ah, yes. The charts and graphs, I'm sure our listeners who are into technical analysis are eager to hear what those are saying about Ambev's price movements. So what do the tea leaves, or should I say the candlestick patterns, tell us?
Let's start with the recent price action.
Okay.
Ambev has been consolidating trading within a relatively tight range.
Okay.
On January 8th, it closed at $1.85, with a trading range between $1.79 and $1.85 for the day.
So not a lot of movement, which could indicate that investors are waiting for a clearer signal before making their next move.
Right.
Okay.
However, it's worth noting that trading volume was significantly higher than average on that day,
Okay.
suggesting increased investor interest.
Okay.
High volume often precedes significant price swings, so it's something to watch closely.
Okay, so we have this tension between the lack of price movement and the surge in trading volume. It's like a pressure cooker waiting to explode. But in which direction? That's what we need to figure out. And I'm guessing those technical indicators you mentioned can help us with that.
Indeed, they can. Let's look at the moving averages first.
Yep.
We see a somewhat bearish picture with the 5-day, 10-day, 50-day, and even the 200-day exponential moving averages all signaling sell.
So both the short-term and long-term trends are pointing downwards, not exactly a ringing endorsement for Ambev.
However, before we get too pessimistic, let's consider the Relative Strength Index, or RSI.
Okay,
This indicator helps us gauge whether a stock is overbought or oversold.
got it.
Ambev's current RSI is 29.69, which is below the oversold threshold of 30.
Ah, a glimmer of hope. This suggests that Ambev might be due for a rebound, at least in the short term.
Possibly. Now let's move on to the moving average convergence divergence, or MESA-D.
Okay,
This indicator helps us track momentum and identify potential buy or sell signals.
got it.
Ambev's MPD is currently at negative 0.08.
So not exactly screaming buy, but not necessarily a strong sell signal either.
Exactly. It suggests that Ambev's momentum is weak, but it could shift if the stock breaks through certain resistance levels.
Okay.
Think of it like a coiled spring.
Right.
It's building potential energy,
Boy,
but it needs a catalyst to unleash that energy.
I like that analogy.
Yeah,
So it's a waiting game for now watching for signs of a breakout.
right.
And speaking of waiting, let's not forget about the stochastic oscillator,
Yeah,
which is another momentum indicator.
right. The stochastic oscillator is showing low readings further supporting the possibility of Ambev being oversold and poised for upward momentum.
Okay.
It reinforces the idea that the stock might be due for a bounce.
So to sum up our technical analysis, we have some bearish signals from the moving averages, but also some bullish hints from the RSI, MACD, and stochastic oscillator.
Right.
It's a mixed bag, just like the fundamental analysis.
Precisely. And that's the challenge of investing. We rarely have perfectly clear signals. It's all about weighing the different pieces of information, assessing the risks and potential rewards, and making informed decisions based on the best available evidence.
Well said. And speaking of informed decisions, our listeners are probably wondering what all this means for them. Should they buy Ambev, sell it, or just sit on the sidelines and watch the show? What are your recommendations for folks who are holding ABEV, and what about those who are considering adding it to their portfolio?
Yeah.
That's what we'll discuss after a short break.
Great. Sounds good. All right, let's break it down. It's a tricky situation. There's no doubt about it. I'd advise proceeding with caution due to those mixed signals we discussed for current holders of ABEV. I'd recommend holding your position for now and closely monitoring upcoming earnings reports and any significant market news for signs of a recovery.
So basically, don't panic sell just yet, but stay vigilant and be ready to adapt your strategy based on new developments makes sense.
Exactly. Now, for potential new investors, I'd suggest waiting for more confirmation of upward momentum before jumping in. Ideally, we'd like to see a decisive break above that $2 resistance level.
Got it. Patience is key here. Don't rush in just because the price is relatively low.
Yeah.
Wait for that confirmation that the bulls are back in charge. So it's a hold for current investors and a wait and see for those on the sidelines.
Precisely. Remember, investing is a marathon, not a sprint. It's all about making informed decisions and managing your risk effectively.
Couldn't agree more. Now, you mentioned earlier that Bernstein analysts are concerned about the weakening Brazilian real. Can you explain why that's such a big deal for a company like Ambev?
Sure. A weaker real means that Ambev's earnings, when translated back into US dollars, will be lower. It can also make their products more expensive for consumers in other countries, which could potentially impact sales. It's a classic currency risk that investors need to be aware of, especially when dealing with companies that operate in emerging markets.
It's a good reminder that even though Ambev's products are popular in South America, their stock is traded on the New York Stock Exchange, so those currency fluctuations can really make a difference for investors.
Absolutely, and it's not just the real that we need to consider. There are broader macroeconomic pressures that are impacting the entire beverage industry. For example, rising inflation is a global issue, and it's putting pressure on companies like Ambev to raise prices. But if they raise prices too much, consumers might start cutting back, which could hurt sales.
Right. It's a delicate balancing act. They need to protect their profit margins, but they also can't afford to alienate their customers. And let's not forget about those supply chain disruptions that have been plaguing businesses worldwide.
Absolutely. Getting raw materials, packaging, and finished products to consumers has become more difficult and expensive. These supply chain issues can lead to production delays, higher costs, and even product shortages, all of which can negatively impact a company's bottom line.
It sounds like a logistical nightmare. So on top of the currency risk and inflation, Ambev has to contend with these supply chain headaches. And as if that wasn't enough, they also have to adapt to changing consumer preferences. What are some of the key trends that are shaping the beverage landscape these days?
Well, one major trend is the growing demand for healthier beverage options. Consumers are becoming more health conscious and are looking for drinks that are lower in sugar calories and artificial ingredients. This shift in preferences is forcing beverage companies to innovate and expand their product lines to cater to these evolving tastes.
So it's not enough for Ambev to just keep cranking out the same old beers and sodas. They need to come up with new and exciting drinks that appeal to health-conscious consumers. It sounds like they have their work cut out for them.
They do, but it's not all doom and gloom amidst these challenges. There are also opportunities. For example, Ambev has been actively pursuing strategic partnerships to expand its reach and tap into new markets. These partnerships allow them to leverage each other's strengths, share resources, and ultimately create a more competitive force in the market.
So they're not just sitting back and letting the challenges overwhelm them. They're proactively seeking out ways to grow and adapt. Tell us more about these partnerships. What kind of companies are they teaming up with, and what are they hoping to achieve?
They've partnered with companies involved in everything from logistics and distribution to marketing and technology, for example. They have a partnership with a major e-commerce platform to expand their online sales channels. They've also teamed up with a leading beverage technology company to develop innovative new products and packaging solutions.
It sounds like they're really trying to cover all their bases, from streamlining their operations to reaching new customers and innovating their product offerings. It's an ambitious strategy, but if they can pull it off, it could position them well for future growth.
Absolutely. And remember, those internal restructuring efforts we discussed earlier, those are also aimed at improving efficiency and boosting profitability. They're streamlining operations, optimizing their supply chain, and implementing cost-saving measures.
So it's a multi-pronged approach. They're tackling these challenges from both internal and external angles. It's like they're playing a game of chess, strategically positioning their pieces to win in the long run.
That's a great analogy, and it highlights the importance of looking beyond the immediate headlines and understanding the bigger picture. Yes, Ambev is facing some headwinds right now, but they're also taking steps to address those challenges and position themselves for future success.
It's a reminder that investing is not just about picking stocks based on short-term price movements. It's about understanding the underlying business, its strengths and weaknesses, and its ability to navigate the ever-changing market landscape.
Precisely, and in Ambev's case, there's a lot to consider. They have a solid track record of earnings growth, a dominant position in a key market, and a proactive approach to adapting to industry challenges. However, they're also facing significant external pressures and need to execute their growth strategy effectively to overcome those obstacles.
Right? It's a complex situation with no easy answers, but that's what makes investing so interesting. It's a constant process of learning, evaluating, and making informed decisions based on the best available information. And speaking of information, we've covered a lot of ground today, from Ambev's financials and strategic partnerships to the broader economic and industry trends that are shaping their future.
We've explored their strengths, their weaknesses, and the key factors that investors need to consider when evaluating this company.
It's been a whirlwind tour of the Ambev universe, and I'm sure our listeners have gained some valuable insights.
And remember, as always, as just a starting point, we encourage you to do your own research, consider your own investment goals and risk tolerance, and make informed decisions based on your individual circumstances.
Now, before we move on to our final thoughts, I want to revisit something we touched on earlier, the potential for Ambev's stock price to recover and even reach $2.90 by 2025. What would need to happen for that to become a reality? What needs to go right for Ambev to turn things around? That's a great question. It seems like a pretty ambitious target considering where the stock is currently trading. What would need to happen for Ambev to defy the odds and reach that price level?
Well, several stars would need to align for Ambev to hit that $2.90 mark first and foremost. We'd need to see a more favorable macroeconomic environment. Inflation would need to cool down, those pesky supply chain issues would need to ease up, and consumer confidence would need to improve.
So basically, the economic winds would need to shift in Ambev's favor. It's like they're sailing against a strong current right now.
Exactly. They need calmer waters to really gain some momentum. But even with a more favorable economic backdrop, Ambev can't just sit back and relax. They need to execute their growth strategy. Effectively, those restructuring efforts we talked about, they need to really pay off, leading to improved efficiency and higher profit margins, and their strategic partnerships. Those would have to generate new revenue streams and expand their market reach.
Right. It's not enough to just have a good plan. They need to implement it flawlessly. They need to prove to investors that they can walk the walk, not just talk the talk.
Precisely. And finally, we'd need to see a shift in market sentiment. Investors would need to regain confidence in Ambev's ability to weather the current storm and emerge as a stronger, more competitive force in the beverage industry.
It's like a popularity contest, right?
Yeah.
Even if they're doing all the right things behind the scenes, they need investors to believe in their story and buy into their vision.
That's a good way to put it. Investor perception can be just as important as the underlying fundamentals. So for Ambev's stock price to really take off, we'd need to see a combination of external factors aligning in their favor, successful execution of their growth strategy, and a renewed sense of optimism among investors.
It sounds like a tall order, but not impossible. And hey, even if they don't hit that $2.90 target, there's still potential for solid returns if they can make progress on those key fronts.
Absolutely. And remember, investing is all about assessing risk and potential reward. Ambev might be a riskier bet than some other companies, but it also has the potential for higher returns if things go their way.
It's a classic high-risk, high-reward scenario. And ultimately, it's up to each individual investor to decide whether that level of risk is appropriate for their portfolio and investment goals.
Well said. Now, before we wrap up this episode, I want to emphasize one crucial point that we haven't explicitly addressed yet, the importance of doing your own due diligence. Don't just rely on our analysis or any other single source of information.
Right? It's essential for investors to take ownership of their decisions. Don't just blindly follow someone else's recommendations. Do your own research. Dig into those financial statements. Read industry reports and really understand the company, its management team, and its competitive landscape.
Exactly. Knowledge is power, and in the world of investing, informed decisions are the key to success.
Couldn't agree more. And with that, folks, we've reached the end of our look at Ambev SA, ticker symbol ABEV.
We hope you found this analysis insightful and helpful.
If you enjoyed this episode of Investing Talk Podcast, be sure to subscribe so you don't miss our future looks into the world of investing. And don't forget to share this episode with your fellow investors and leave a comment with your thoughts or questions. We love hearing from our listeners.
Thanks for tuning in.
Until next time, happy investing.